Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our 11th Annual Banking Conference. Our next live presentation is from Ledyard Financial Group. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book Meeting in the top toolbar. At this point, I am very pleased to welcome Josephine Moran, President and Chief Executive Officer, and Peter Spruge, Executive Vice President and Chief Financial Officer of Ledyard Financial Group, which trades on the OTCQX Best Market under the symbol LFGP. Welcome back, Josephine and Peter.
Thank you very much.
Thank you. And good afternoon to those of you who are on the East Coast and maybe the Central Time Zone. If you're out west somewhere, it may still be morning, but good day in any case. We are happy to be here for, I think, the third year in a row, so let's dive in. Forward statements, the standard disclosures. Some of what we say here may be forward-looking with all the pertinent rules that most of you are probably familiar with, so I will not spend time here. We have basically a four-part presentation, some discussion of the company overall, a little bit of a deeper dive into our two core businesses, and then some discussion of our multi-year strategic plan, and then some discussion about where we stand from a risk management perspective across the different pockets of risks that bankers typically run. So diving into the company overview, we'll touch on all of this in more detail, so I'm going to go fast here. But we are a nearly $1 billion community bank with a roughly $2 billion wealth management business. We are in the Northeast, primarily in New Hampshire and Vermont. And the fact that we have our big wealth business meaningfully contributes to some diversification of revenue. Historically, on average-ish, about 40% of our revenue comes from the wealth management business. We have over time developed a fantastic reputation for service and customer satisfaction. We have, skipping to the last bullet, in the last few years, meaningfully reoriented the direction of the company. And have been very much focused on growth, and much of what we'll talk about in the next half hour here will be explaining how we're going about doing that and how that makes sense. In a nutshell, we like to think of ourselves as the fusion of a bank and a wealth management business supported by an opportunistic growth strategy. And by that, I mean both organic growth and inorganic growth should the opportunity present itself. And all of that, of course, like good bankers, built on a foundation of rigorous risk management. The synergy in green is, in fact, designed to be twice the size of the bank and the wealth icons here, because the synergy is where we derive value for investors. Simple stuff, legal structure. We are LFGP, as was mentioned. That's the ticker symbol that we trade under. That is the holding company. We have a single operating subsidiary called Ledyard National Bank. It contains the wealth business within the bank, so we don't have a separate subsidiary for the wealth management business. Everything happens inside of the bank. From a regulatory standpoint, that makes us entirely overseen by the OCC, a regulatory body. Senior leadership here for this, I'll turn it over to Josephine for a second, and then I'll come back to me.
Okay, great. Thanks, Peter. Good morning, good afternoon, everyone. Great to be here. So I joined Ledyard in January of 2022 as the President and Chief Banking Officer. I took over the position of the CEO in May of 23 after a transition with the long-term CEO that preceded me. I have over 25 years experience actually in the financial services industry, 20 years of leadership experience, and the majority of my career has been spent at larger institutions for about 17 to 18 years there. And then the remainder of the time was regional and community banks. I have a very robust retail and wealth management background. That was the majority of my career, and retail encompassing all areas of retail. So I relocated to New Hampshire at that time, and best decision I ever made. I'll talk about Michael Hacown for a second. Michael Hacown actually joined the team about 6 months before me. He had extensive background in the wealth management. He is our EVP of wealth management. He runs the entire operation, including private banking, reports to him as well. He also has over 20 years of experience in investment management, and he previously worked for TD Wealth in New England prior to joining Ledyard. So back to you, Peter.
Yeah, so that leaves me in the middle. So my career has been, my professional career has been entirely in banking and bank-like institutions, always on either the finance or risk management side. So I have a deep background in balance sheet management and bank finances and that sort of stuff. Most of my time has also been spent in larger institutions, but I've also worked at some really small ones, so ones you've never heard of, as well as ones you've definitely heard of, like Capital One or E-Trade Bank, for instance. So that's the senior leadership team. Moving on to some basic facts about the company. So we mentioned the fact that we are in New England. So we figured we'd kind of put a map up here to give everyone a sense of what that really means. So you see down in the lower right-hand corner is Boston, which most of you have probably heard of. Our nearest location to that center of population is about 75 miles to our southernmost location in Concord. And then in the box above that is where the heart of the bank exists, and that's in an area called the Upper Valley of New Hampshire. We do have a branch across the river in Vermont, in Norwich, but that is kind of where the company grew up. We have about $737 million in client deposits across 9 locations. And we do have a wealth management business, as mentioned, staff of about 40. We have 3 offices. Those are the ones in either yellow or orange. And we have clients pretty much all over the place, 40 states, 10 countries, 6 continents. We're working on Antarctica, but haven't quite got there yet. So the history of the bank was established in 1991 up in the Hanover town, which is where Dartmouth is located. As mentioned, the bank is wholly owned by Ledyard Financial Group. Total assets as of the end of last year were $950 million, so just shy of $1 billion. And our assets under management at that point were $2.1 billion. If you look at our financial performance over time, you can see that we've been pretty much a consistently strong performer. Perhaps the last couple of years accepted off of the trend, and we can talk about that in a minute. We do have a strong balance sheet. The leadership is quite new. Josephine and I have been here 2.5, 3 years. Much of the rest of the executive team has also got some recent, joined the company recently as well. So lots of energy, and we have a super energized board. And we have spent the last couple of years a bit retooling the inside of the bank to position us for growth going forward.
Newer to the bank, but very experienced and very talented.
Very good point. Thank you. So you can see here on this slide, it used to be much messier, but I talked to the marketing folks and they put it all together much more neatly than I used to have. But the point here is not to go through each of these little icons, but to recognize that the things we're doing are being recognized in the industry, the best bank to work for, a bunch of local awards for best business, best new business, et cetera. So we are very proud of.
Fastest growing last year, which is something to note.
Yep. Okay, so here's a quick overview, quick snapshot of the 5-year trend. The 2 panels up on the top really talk about the size of the business. So on the left, upper left, is total assets for the bank. So you can see that's been pretty much consistently growing. On the top right, you see client assets under management, also for the most part generally on an upward trend. The net income chart on the lower left is where you see the pain of the banking industry in general for the last couple of years. We are very proud to have actually exceeded in 2024 the earnings that we hit in 2023. And I think if you looked inside of 2023 and 2024, you would find that the low point actually was the fourth quarter of 2023, and we have been on an upward trajectory ever since. So in the little table on the right, you can see our income for the last couple of quarters that have been publicly reported. So in Q4, $1.3 million in income, ROE towards the bottom of the page at about 9%. And we'll talk a little bit more later, but worth noting here, net charge-off is actually a negative number, which of course means we had recoveries. And that, as you'll see in a couple of slides later, is not an unusual occurrence for us. So we are very prudent risk management on the credit side. With that, I think I turn it over to you, Josephine, to kind of walk through the description of our two core businesses.
Yes, thank you. So Peter mentioned some of this before, but basically our entire franchise, we have 9 physical locations. We have a newly introduced over the last year full service call center. We have very robust online digital capabilities, and we also have state-of-the-art ITMs. So we pride ourselves on our service, but we want to be omni-channel to our clients, and we provide the same service no matter what area you're utilizing of the bank, and we meet you where you live. Historically, we've been in the Upper Valley. We're also in the Sunapee, New London area. We added a financial center in, we call our branches financial centers, and that was added in Concord in 2020. Concord has been a very, very successful endeavor for us. We originally went into Concord about 4 years prior to introducing the financial center by doing a team lift out of a wealth group, and then later on added to the area with the financial center. We offer a full suite of deposit and loan products. We can, with our wealth business and all of the upgrades we've done in our digital and our technologies, we can offer a client anything that they need at any stage of their life, and offer that personalized service along with having the digital capabilities. As Peter mentioned before, we're very proud of our very, very robust customer satisfaction scores. We measure them. We take them very seriously. We act on our clients' feedback. We look for trends, and that's important to us. I think the most important piece on this page is that and I will be talking about the strategic plan, but we've really invested in the growth strategy of the bank. And we've experienced 38% loan growth over the last 12 months. When we took over the bank in 23, we're at $749 million in assets, growing to $951 million in just under 2 years. Our client deposits are up 32% over the last 12 months. And they're up 5% excluding the transfer of wealth management funds. Okay. Just high level overview. Here's our community banking core market. It's very unique in the Upper Valley. Obviously, Dartmouth College, Dartmouth Health, largest employers, Hypertherm. A couple of important facts is the market area, the home value there is $550,000. The median household income is $105,000, and it's a highly educated area, very robust in medical and biomedical and med tech and engineering and software industries. And also the Upper Valley has the highest number of businesses, employees, and self-employed of any similarly populated region in the United States. So great area to do business in. Let's talk about our loan portfolio a little bit. The great news is that even with 38% growth, we did not sacrifice yields. We actually did really improved the yields. As you can see from 2023 to fourth quarter of 2024, the improvement of our loan yields reaching almost closer to 6%, and also outperforming our peers. We were underperforming. We now outperform them in terms of spreads. And our mix is 56% commercial, 44% residential. We do keep our residential loans on the books at this point, but we've had a very nice uptick all the way around. And we only do consumer lending is home equity. So we do not do any other kind of lending except really for commercial, C&I, and also residential and home equity loans. Anything else you want to add on that page, Peter?
No, just to clarify further about the consumer, we don't have auto, we don't have student loans, any of that.
Right. And then looking at our deposit portfolio, very high percentage of demand accounts. We actually have very high value demand accounts, very high dollars in checking accounts because of the clientele that we serve. Our overall balance of funds is of deposits 811 million, and obviously with the rate increases over the year, our costs of funds have increased. A lot of that has to do with the amount of wealth funds that we have on our books that we transferred over. But we have experienced nice growth. And even in a shrinking market where we are, we're capturing more of the market share, as indicated at the last FDIC reports. I don't know if you want to add anything to that.
Yeah, no, I'd also point out the yellow or amber colored line on the deposit cost, which, for us spiked up, same as for everyone else. Not that one period a trend makes, but you do see a decline from Q3 to Q4 of last year, despite continued loan growth. So we are starting to rein in, if you will, some of that cost of deposits. And as rates go down, that helps with this as well.
Mm-hmm. Okay, let's talk about our wealth management. So we feel that this greatly distinguishes us from other community banks. We have a great wealth management program. It is a business line. It's not a subsidiary. It's a business line just like our commercial bank. We have a very unique team-based service model where 3 people support each client. 90%, nearly 90% of our AUM is managed money. We create our own portfolios and manage the money in-house with our team, with our CIO and our team of portfolio managers. Most of our business is derived from a couple of different areas. Client referrals, of course. We're doing well with generational wealth transfers. And we have a couple of different types of client outreach. One of that is virtual workshops and master classes, which we implemented at the end of 2022. And we have derived a high number of new clients and new revenue from that outreach. And of course, we also do, targeted social media marketing, publications, and some digital ad campaigns to also do outreach regarding our wealth management. We also have a private banking division, which is a division that's part of the wealth management group. And basically, we call them the quarterbacks. They tie in the wealth management clients to our banking clients. Every wealth management client is a private banking client. We introduced a new healthcare program in the middle of 2024 that is a big focus for our private banking group. We have a huge opportunity with healthcare. We are catering to the entire healthcare market, no matter what line of healthcare the person is in, and we can service them on all ends, on the lending side, on the business side, on the
Okay, it looks like we might have lost Josephine, and she might have gotten frozen there. So I'll try to take on. So wrapping up, private banking are the quarterbacks that try to put together our clients, both with the wealth side as well as with the banking side of our shop. On the next slide, this is what we call the Ledyard Advantage on our wealth management business. So you're back, Josephine. You want to take this back over? Oh, no, she's frozen again. So the Ledyard Advantage, the main thing I think to take away from this is that because our wealth management business is part of the bank itself, we can do a lot more than individual standalone RIAs or similar sorts of companies. So we do have the team approach that Josephine mentioned. We have some planning tools. We have various investment strategies that are all homegrown, if you will. and designed in a custom fashion for specifically the needs of each of our clients. We do have trustee services, and we've mentioned the private banking experience as well. Some key metrics on the wealth management side. So we talked a little bit about assets under management. That's the upper left panel. So consistent growth over time. You see the lighter green bars are the last 4 quarters of last year. So we go from annual to quarterly. And then the revenue, you can see, is also similarly growing, largely in concert with the AUM. The yellow line here represents the percentage of revenue that is brought to us by the wealth business. And you can see it fluctuates around 40-odd% on a historic basis. So we finished the year at $2 billion plus. We've had about 7% average growth over the last 5, 6, 7 years. And in terms of the scope of the business, again, $2 billion in assets, 600-ish client relationships, 40 states, 10 countries, 6 continents. Doug Phillips is our Chief Investment Officer. He's been with us since 2019. He's a fantastic investment management guy, but spent about 30 years in the business. And he's his particular expertise is in tax efficient and low cost investment strategies. With that, I will turn it back over to you, Josephine, if you're here.
Yep.
Nope.
I'm here. Thank you. Sorry about that. Okay, let's go into strategic plan. So, our overall and our overarching vision is that we are the bank that makes life better. And what we mean by that is by all of the services that we have to offer to our clients, we're going to improve our clients' life at any stage of their life, offering customized products and services, and deeply understand what the needs are of our clients and our community. We feel that about our clients, about our community, and also about our team members. Some of the factors supporting the vision, obviously, is we have both physical and online presence. We like to call it Fizzy Digital. We invest in our community very broadly. And then also we have an expanding fintech product set that it allows a lot of personalization for our clients. On our end, as a company, great service. We have an excellent wealth management business with a team approach. And we've made a lot of investments in the business. We've made investments in the leadership team. We've made investments in our infrastructure. We've made investments in a number of different things that are both client-facing and back office construct. We have a very strong balance sheet, and we also have a great, committed, and engaged and very diverse board. So the evolution, the strategic plan began in 2022. I was brought in actually to move the bank to the next level and grow the bank along with the leadership team. So we have 3 pillars that are part of our strategic plan, and that is profitable growth, client experience, and employee engagement. And that has stayed very steady. We have not changed those pillars. We're still focused on those. We launched the plan in 2023, and we completed our succession plan at that point. There were very key items that we focused on. We made investments in people. We made additions to customer-facing staff. We completely revamped our marketing. We were doing a lot of not digital, mostly newspaper and things like that. And we changed it completely to digital, and also did a lot of video last year. We introduced new incentive plans that incented the teams to refer to each other. We also invested in relationship building training that hadn't been done in quite some time. And while all of that was going on, we continued our infrastructure investment, looking at efficiencies and trying to make life better for our team members and also our clients. What you will see in 2025 is just ongoing investment and growth. All of these, everything that we did, all of the plans that we had in our strategic plan, all of our tactics, that led to very successful growth over the last 2 years. What we did pay off. So our ongoing is product set growth. to continue to expand the wallet share and the relationship of our clients. We're going to continue to expand our digital delivery, and we continue to look for inorganic growth opportunities if that makes sense. In terms of the execution, Peter used this word before, but synergy is a very huge part of this. We call it our one Ledyard framework, and that is the foundation upon what everything is built upon. And we feel that one of our biggest differentiators is we have no silos. The bank works closely with wealth. We share clients. We actually come together once a month to discuss opportunities and how we're going to enhance the client and expand the client relationship.
Oh, I think we might have lost Josephine again for a second. So yeah, the point here is what sets us apart, really two things. One is the fact that we have a wealth business that is as large as it is for a bank that is our size, and the fact that we make a concerted effort and are actually, we think, pretty good at generating the synergies between those two businesses. Looking at the time, I'm starting to run tight here, so let me skip ahead to the risk management. Skip ahead to the risk management section. So risk management, of course, is the foundation for everything. If we look on this next slide on asset liability management, some key metrics here. The chart in the upper left talks about our capital levels. So blue is the regulatory minimum for the key ratios that are measured here. And you can see that we have surplus in all cases. In the lower right-hand corner, you can see our investment portfolio is currently in the high $200 million range. That is shrunk over the last couple of years as we have rotated out of the business of being in investments and borrowings and rotated into more lending and deposit gathering businesses. Investment portfolio, some more details here. High concentration in municipal bonds dating back to the kind of pre-pandemic era. So that is some of what we're trying to chip away at over time. So it is what it is for the moment. On the credit risk side, I mentioned this earlier. I'll just kind of direct your attention to the lower left panel, net charge-offs. Again, a negative number here means recoveries. So you can see that in 4 out of the last 5 years, we actually had some recoveries rather than actual charge-offs. The decline in the upper two charts about sort of coverage ratios relates to the fact that around the time of the pandemic, we had built up a huge reserve, kind of a fear reserve, if you will. And at the end of 2022, we kind of realized that that's really not necessary anymore. And then in 2023, we adopted CECL, which we've been following ever since. Let's see. Operational risk, touch on this briefly. We do have a formal risk management committee. We do have relatively new and, again, experienced chief information officer on board. We are close to $1 billion, which many of you know requires some additional control and environment constraints to be put in place. We are well on our way towards building that out, and we expect to probably cross $1 billion this year. So we'll be in fine shape for that. I do want to address one or two couple of questions. Thank you for the questions. They are pouring in. We're probably out of time to answer them here, but I will answer all of them at least via email. There was one question about our efficiency ratio, so I do want to touch on that. It has been a little rough, if you will. I would say that is the result of really maybe a combination of three things. Number one, in the last couple of years, we have continued to invest in the business, choosing to go on offense rather than defense. That you couple that need for investment with the industry-wide shrinkage in revenue, that gives you kind of an ugly ratio for a little bit of time. But we certainly are very focused on that going forward into the coming years and quarters to grow into that and drive that ratio down. I think that just about takes us to the end of time. We will, like I said, answer any questions we get via email. There's a bunch on the question panel that I've not been able to touch on. Our contact information is here in the last slide. So we'd be happy to speak with any of you. I believe the introducer also mentioned that we have some time slots available for follow-up, and we'd be happy to spend time with any of you to discuss any of this further. There is also a more full discussion of our business with some of these same slides and some additional slides that will be posted to our investor relations website probably by Monday, if not later today. So we appreciate the time you've taken and appreciate you listening to us tell you a little bit about this company that we think is a hidden gem. And with that, perhaps I will wrap it up unless Josephine is back and she wants to say a word or two.